Hello and welcome to another update video about oil. In this case, I'm going to analyze Brent Crude Oil because I had a lot of requests, and also because I believe we have started a sell-off here from the peak of around $139. We have now already moved down significantly, pretty much around about 28 to 30%. And I do expect this drop to continue. Already end of March, I made the Discord gold members of my main channel, More Crypto Online, aware that I'm exiting the gold market. That was around the period when we were at, let's just double check that, I think it was end of March. So it was pretty much at the peak. Let me go to the daily chart. Posted that end of March. Where were we? Here. Yeah, pretty much at the peak. I made the channel members aware that I do expect a dip. Yeah, a strong dip down. That was around here the 29th, 28th of March. I posted that and we were at around $120. It became too hot for me. Yeah, from an Elliott wave point of view. This is also played out so far, and I'm going to take you here through the longer time frame Elliott wave count first, and then we're going to take a look at the shorter time frame and where this correction will go. Because in contrast to many others, I do expect a strong dip now of the oil market. By the way, there have been a few banks now that started to give out price targets of $40, $50, $60 for oil as well. Yeah, so it's always in a market environment when you know everybody's getting super bullish, yeah, because of inflation and stuff like that, that it's actually starting to go the other way. Now, bear in mind, I'm not bearish on oil. Well, short term I am, but overall long term I'm very, very bullish on oil. So from that wave one here in July 2008, which was basically the high at $147, we moved down strongly towards the end of 2008 here towards $35, and all of this here was just a long correction, a so-called WXYXZ correction, an Elliott wave count, a complex corrective wave pattern, which then found its low here at around $17. By the way, we saw oil prices getting negative in 2020. This is not reflected here on the CFD chart, but in the end it doesn't make a great difference. What we're looking at here is that we started from the low here, an impulsive move up. So all of this was a correction. You can see how long these can take. Yeah, this took over 10 years, 11 to 12 years of a long correction. So first of all, what I would like to show you is the price target, the long-term price target for gold for this wave 3. You can see the wave 1 in yellow, the wave 2 in yellow. What would be the long-term bullish price target for gold? And this, again, this will take years to get there. Maybe even, I don't know, 5 years, decade maybe, we'll see. And we're talking here about prices, at least the 1.618 FIB extension reached. We're looking at least, yeah, $238. Okay, so possibly higher. This is one major target long term. First of all, we need to get above the wave 1 high at $147 here from 2008. But where are we now? Why do I expect a crash of the oil market, which in my opinion has anyway already started? As I just showed you, we've moved down like 30% already. So if we take a look at the more detailed Elliott wave count here, and this is still the weekly time frame, because things can take a while to play out in the oil market. So looking at it from the low here, we looked at a wave 1 to the upside, a wave 2 to the downside, then a wave 3 to the upside, and a wave 4 to the downside. And this is where it then became difficult. Yeah. Because this wave 5 was super, super long. It pretty much maxed out what it could do. It maxed out what it could do. I mean, if we take a look at the Fibonacci extensions from that wave 1, you would reasonably expect a 2.618 Fibonacci extension. It even moved all the way up to the 3.382 FIB extension at $140. So, you know, this is maxed out, you know, even more than the 2.618, more than the 300, absolutely maxed out, which shows, you know, this sort of reflects the current market environment, doesn't it? But nothing can move up forever. And therefore, when I saw the first indication that this is over, I made the channel members aware, again, already 3 months ago. And all of that by using the Elliott wave method here. And so far it has played out, and I do expect a further downside. What do I expect now? I expect us to move down, because this was a wave 1. Again, 5-wave move to the upside in a wave 1. So if I put that on the chart here, let me zoom out again to the weekly chart. So you can see we had a wave 1 here, a wave 2 down. We are now in this wave 3 that can take us to $260. But within that, and probably this will be even higher based on the length of the wave 1. To be honest, looking at that wave 1, we're going to be higher than 260. But anyway, this was just the minimum target. So looking at the wave 1, I would now expect a wave 2 retracement. And this is exactly the reason why I exited the oil market. So looking at this, we would expect a price between the 50% Fibonacci retracement level, which is the $77 level, and I would say in a more extreme case, the 78.6% level at $42. And I've seen a few price updates now, I think issued by the Citibank. They also talked about possibly a $40 oil price. And again, this came out, I think, last week or so. And the Elliott wave method, which is great for, especially for forecasting long-term price movement and swings, told me basically already in March that we are going to go down. So this is where we are currently. And this is now what we have to sit out, in my opinion. Strong indication that this peaked based on what it maxed out everything it could do. It can't go much higher anyway. And the strong nature of this downward move. So looking at it, we can at the moment, and this could become a more complex correction, but we're looking here at the moment at an ABC correction. A, B, and the C could really go down here to 76 or even, $77, $62.59 or $42. These are the three possibilities we have. And looking at it from a point of view where we say, all right, let's take a look at what do we actually see on the lower time frames? What would this correction be looking like? So from that point of view, we can say ABC. Let's take a look at the Fibonacci extensions, because one target for this is the 1.618 Fib extension for the wave C. And that would be $63. $63, the 1.618 Fib extension, pretty much in line with the 61.8% Fibonacci retracement level. So very strong indication here at around $63. This might be where we reverse. Looking into the future, possibly, not guaranteed, but this is where it would make sense to get to. And this is currently what we can see. I mean, maybe let's take a look if we can see a little bit more on the daily chart, how this is currently working out. Put that away here. And that would assume that we have come here from the wave B high. We are now in this wave C. Looking at it, I would assume that we have now seen here with the low. So I had to go to the 2-hour chart, but from how this looks like, we started obviously from the top here in this as a wave 1, came up in a wave 2. We're now in the wave 3, then we'll get a wave 4 to the upside, and there will be a wave 5 to the downside in the most simple form illustrated here. And that wave 5 could really then reach the $63 level. So I'll keep track of this for you. Let me know if you're interested generally in an Elliott wave analysis of the oil market. But I think it's very interesting, especially at the moment, how we can see some of these assets sell off, while others like Bitcoin, for example, have already bottomed out. And we might see a reversal soon for Bitcoin, for example, but gold, silver, oil are just really only starting. I mean, gold is already within the sell-off here. Very clearly, what I have to tell you very clearly, if we zoom out a little bit again, this is not a necessarily super bearish outlook. This would just be a corrective wave 2, after which, and this is the opportunity from somewhere in here, we are going to see that wave 3. Yeah, so if I label that as wave 2, basically wave 2 within wave 3, then we will get next here a wave 3 of the wave 3. And this would be a super bullish, a wave 3 within a wave 3 is usually very bullish. So we're looking at that after this, after a reversal. So a super bullish long term on oil. So yeah, hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, maybe check out my main channel, More Crypto Online, and see you in the next video. Bye bye.